The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, looking good. Billy Ray, feeling good, Lewis. Our guest today will be Arch Crawford Perspectives. Tomorrow we will have Bill Meridian, Cycles Research out of Vienna, Austria. He'll be our guest tomorrow. And what we'll start out, what we usually do, is with the German DAX and the FTSE. And as you can see, they're trending down, much like we are in the stock market. I'll put this quick little summary here of the German DAX so you'll be able to see it. This is a pattern sent to us by someone over in Munich, and you can see he's basically looking at those two black lines that are there. Those folks, I don't divulge those lines on what they do because, first of all, they don't work all the time, but when they work, they do work some of the time. So I never talk about them too much because of the fact that they don't work all the time. So you got to remember that some of these things don't work all the time. And speaking of don't working all the time, let's move over here and take a look at the euro. Here again, you're going to be able to see this is actually the case where these little patterns actually work. I don't divulge what these are, so please don't send me an email asking what they are. But you'll notice up there where the sold short area is up there at that 120 level, and then we added to the short there at the 118.80 level, and we just covered all the shorts here at the 116.65 level this morning. Now, the market has been down 8 days. That's one of the reasons for covering. The second reason is because that red lines that are there, and you're also at a 1.27. So, unfortunately, I've been sworn to secrecy not to describe what those lines are or anything. But if you work hard at it, you could probably, figure it out because it's quite mathematical, folks. You have to have an astrophysics background, and again, understanding all the works of Benoit Mandelbrot and Dr. Al Larson. When you do that, then you'll probably be able to understand how some of these patterns actually work. I don't understand why you're laughing, Marshall. I'm trying to be as serious as hell. Okay, let's take a look here. Since we're talking to Marshall, got a really good chart here from the Elliott wave theorists, and here's what they're basically saying here is that you'll look at the top four charts are from 1929. Now we're looking at 2020, and it's showing that's almost 100 years, isn't it? You got real estate, and he's looking at a possible deflation in all of these things. You can see what happened in 1929, and he is saying this is possibly going to happen. Here again, the key word there is possible, folks. And I don't know whether there'll be a deflation or not. Remember, the Federal Reserve had only been operating about 13 years. It started in 1913, so in 1929, they didn't have the facilities that they have now. So as our friend Shane Smolian has told us that, they have this Fed juice, and he's, Shane has been telling us that they've lightened up on the Fed juice. They're not even in there. No, there's no moving averages on that chart at all, Terry. I save those moving averages because that's another part of the secret stuff that I use here in my trading to when those moving averages cross over. I don't discuss that ever, and I probably never will. Now, let's take a look at one of those other little red line deals. That's what I call them, folks. I call them the little red line deals. This is our pattern that we had yesterday. If you'll notice, on the 24th, you'll see we had that big, actually on Tuesday, you'll notice we were making that Gartley up there. Perfect perfect little red line pattern up there. The ABC on the downside comes to 103, folks. That's where we're trading this morning, 103. And look what happened. Look what happened during yesterday's trading. You had another Gartley pattern up in that area. So these, they don't work all the time, but they work some of the time, and that's really what you got to do. You don't have to worry about the news. too much, but those are just a couple things that we're looking at here this morning. I'm going to save the comments about the silver because Mr. Z is coming on to talk to us about it a little later, but we hit our objectives in silver, and it looked like it was going to be an absolute incredible trade. It rallied 15 cents right off the bottom, and we'll talk about it a little bit later when we have Mr. Z on the line, and he'll give us a better idea of what he's looking at. Now, I did want to show you hold on one second here. I've got to get the right chart up. Bear with me one second, and we'll be able to see it. Here is the one that is the big problem, folks, in my opinion, and I've been saying this for quite some time. This is the banking index. You know, the market made a low in March. You'll notice that it made the beautiful 135 pattern. Well, we rallied up to a 61% retracement. And, yeah, there you go. Okay, hold on. Anyway, you'll see here, we made a 61% retracement, came down to 0.5. You can see that there in July. Then we rallied up to exactly 61% retracement. And look what's happened this week, folks. You see these gap down here on Monday? This is really bad. This is saying that you could have some really unwinding here of these banking stocks, and they control the money. So be careful of that. That's one thing that's going to be very interesting. In fact, we're moving towards a moneyless society. I don't think there's any question about that. China is already they don't have money anymore over there. Everything is done by the telephone. Everybody has a telephone. It's flashed onto an app, and they know exactly where you are, what you're spending, and what you're doing. And we will be there pretty soon because Big Brother has certainly arrived. So, and he'll take care of us. Remember what Ronald Reagan said: any government that can give you anything that they want can take it away from you. I think that might have been Thomas Jefferson. Yeah, I'm pretty sure it was Jefferson. But could be wrong too. I'm wrong quite a bit anymore. Let's remind ourselves, though, folks, that these things are not as hard as they look if you'll just spend a little bit of time in reviewing how the markets act, and if and do in fact repeat over and over again, which we know they do. And that's the real key here to watching some of these things. Now let's get over here to the to this U.S. dollar index. I want to go. The question has been popped up here about the euro. Since we got up here, and we'll be able to see here. Okay, there we go. You'll see here that we have this. It's a perfect ABCD, folks. It just can't be any more perfect. If you look at the AB leg, you look at the CD leg, it's just absolutely perfect. If you're willing to do it up there at the top, you got to do it there at the bottom. That's basically the bottom line. Now, the fact is, maybe it gaps down and keeps dropping and dropping. Yes, if that's the case, and you've got to look for another place to get in. But on the flip side of that, it might get up to an area where you could possibly take a look at, putting new positions back on after you get it, and that would form what we call the 135 pattern that we got from Roy Longstreet and his son Bill. So that's another one, forces you to trade in the thing. Okay, do we have more? Ruby saying, do we have more NASDAQ aggressively to the downside? Well, our target is 10,000, and we're trading at 10,600. I certainly believe that's where we're going. All we had was a two-day rally. It went exactly to the 61% retracement. We talked about that yesterday, getting up there at 12,000, and now we're 600 handles below, so it looks lower to me. We're going to take a break here. We'll be back. We're going to have Mr. Z on the line, hopefully, and chat with us. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I believe we're talking with Mr. Z out of Philly. John, are you there?
I am, sir. Thank you for taking the call, and good morning to you.
Good morning to you. What can we help you with, or what can you offer us today?
Well, you're going to help me with the silver charts. You and I and a great many others are very pleased that we've had this abrupt gold and silver sell-off commencing Monday morning, giving us a chance to reload at lower prices if we're trying the bullish speculation. So in the context of that, let me just share something that I've come to use. I wasn't effectively using this idea early in my trading career, but more and more often when I saw it come into play, I'd use it, and it really helped me. And that is just looking at markets going into prior swing points, swing highs, swing lows. And thank you so much. You've put into Tiger TV your monthly silver charts. And I find it just fascinating, and what's relevant here, as far as I see it, is that, prominently speaking, the monthly silver chart shows a swing high, most recently in July of 2016, and further back in time, I think that was February or March 2008. And both those swing highs were at an identical price, of $21.25 an ounce, give or take. So we've come plunging back down to that. I, as a trader, will be buying dips against that sort of level. So that's what I'm doing. What I wanted to ask you specifically, given that you've traded longer than I have, much longer. What was it, 1838 you told me, Larry?
1836, John.
Okay, very good. And dealt with all sorts of very skilled people over your years. Have you found that that idea of buying or selling against prior swing points as being a helpful tool in your trading arsenal?
Yes, John, of course, because we know that markets repeat. Now, what I like to do is I like to see a nice pattern coming in at that time, and that's the ideal situation. But sure, I watch those levels. Well, if you've ever studied any charts, you can see how much they repeat. So you've got to pay very, very close attention to that, at least in my opinion.
Very good. I appreciate that. One thing, one follow-up I'll just share. This has nothing to do with anything near term. I'm frankly even loath to say it out loud, but I find the yearly silver chart as being fascinating in the perspective that high back in 2011 and 1980 hit peaks at the identical level of 49 or 50. And I always had in the back of my mind something I was taught by Jim Flanagan out of Gann Global Financial out there in Los Angeles area. And he had studied hundreds of years of market history and observed when markets make double tops separated by years and or decades, once exceeded, tend to double in price. And if silver ever gets above 50, that little rule of thumb that Jim Flanagan taught me would suggest a move towards, 100. What I will share with you is we saw that little rule that Jim taught me apply to numerous markets over the past 30 years. The one that strikes me as the one I recall most was, first, frankly, the gold market, which double topped in 1980, and then 2000 and 2008 near 800. And then once we punched past that, we doubled. We went up to 1900. And in 2011, the cotton market surpassed a double top that was somewhere around $1 or $1.20 a bale. And the first high near $1 was way back in the Civil War. The second one occurred somewhere, I'm thinking it was in that 1980 time frame. But we'll recall once the cotton price surpassed that in 2011, where did we go? We doubled from 120 and hit that high at 240. Of course, we didn't stay there, but that is just an infrequent but powerful little observation that always is lurking in the back of my mind when I'm thinking about Jimmy Flanagan's ideas.
I think you're absolutely correct. Jim's got some great ideas, and he is the number one Gann guy, that I'm aware of. Now, John, you've posted a chart into the den on what you're looking at these patterns potentially in the gold. Do you want to describe what you're looking at there?
Yes, Larry. Thanks for posting that in the Tiger TV. My speculation, bottom line, is that this decline in the gold price holds 1788. That was a high in April, and then bottoms and then rallies above the August high, which was 2074 on the spot contract and 2089 on that December futures contract. What I bisected in there was the pattern that occurred between August 12th and September 17th last week. It's a nice little contracting triangle, a pattern within a corrective pattern that suggests that this plunge that we've seen since last Thursday is abrupt, wide price spread, but very brief. And once it bottoms, the correction's done, and we reverse higher strongly, reverse higher as abruptly as we plunged just the past 5 trading days. So that is you know me, Larry. I've learned over the years about being wrong so often, but not letting being wrong get in my way of trading profits. So what I do is, of course, I form scenarios, and when I see a scenario completing and I can find low risk, I can take a shot. And then when I'm wrong, of course, I don't lose much. and if I'm right, I make a bunch. So I just share that, and the reason I shared that with you this morning is because if the scenario that I've just identified and shown graphically, if in fact that's correct, this abrupt decline bottoms and reverses higher just as abruptly. That would be what I'd expect. Of course, only time will tell if that occurs, but I'll be set for that if it does. And of course, if it doesn't, I'll be wrong and take some small losses on being long COMEX gold futures. But that's the game we play.
That's certainly a great plan, my friend, and I think if you stick with it, you're going to be great. Hey, thanks for calling in, John. And please call in again. Mr. Z from Philly. We'll be right back, folks, with Arch Crawford.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the chart of the December silver that we did yesterday. As you'll notice here, we were trying to buy it at $22.96. We were able to buy it there. The low of the day was $22.95, and we rallied up to $23.11. And I was licking my chops, and I said, "Boy, we've got a monster in the making." And so I wanted to raise my stop. And by the time I put the order, typed this on the chart. It was already trading at 23.04, and then of course it went all the way down to 21.70. Now, all I was doing there was just reducing my risk as quickly as possible and ended up being the best trade of the day, even though it was a loser. Fortunately, the euro kicked us in and we were okay. However, we have a gift for you today, and that is Arch Crawford of Crawford Perspectives is in the house. Arch, are you there?
I am here. Thank you.
Arch, I have some news. I remember a fellow that we had from Tucson, Arizona with the same name as you coming on September the 3rd with a big sell signal, which happened to be the high of the market. Now what we want to know is, where do we go from here, my friend?
Well, I'm just looking at the daily charts here, and they look very toppy. And we're still in the danger period of, if you're going to have a greater than normal decline, the chances of it happening in September and October are very high relative to the rest of the year. So you can consider that a danger period every year, but it does not drop every year. It doesn't go down every year, but it goes down more than it does any other 2 months.
So they have a strong affinity for bottoms being made in September and October?
Yeah, usually it's better if it's later October. It's more reliable. But
okay.
It can happen earlier.
Okay.
I'm not looking for it right now.
Okay. Arch, I got a question from one of our listeners about the planet Pluto. I don't know anything about it, but the comment that he's saying is that the planet Pluto is returning to its natal positions for the first time since our great country was founded. I know that it's a little farther than a 200-day moving average, but is there any significance to that happening at this time?
I believe it'll change everything.
Uh-huh. So you think this is a big thing then? No,
not necessarily.
Okay.
It'll be difficult and scary, and I hope we come out of it okay.
Okay.
It's still a ways away, but not that far anymore.
Okay. And there were two questions here. The first question is, are you still short your service in stocks?
Yes.
Okay.
Definitely.
Okay, I have another question here. I don't know whether you can answer it or not, but nobody else can either. You can answer the question, but the question is, any feeling positive or negative about one candidate over another? Based on astrology, nothing else.
Yeah. Interesting to me is that on the day of the election, Trump will have Uranus, the planet of surprise and power and all kinds of things. It's more like an electrical storm and lightning flash, and that is extremely, a powerful and immediate event. And it's on his midheaven. Uranus is on his midheaven the day of the election, according to the data I have, which is not the same as what everybody else has. So that may be questionable. But it's already shaping up to be that. I mean, we know already that it's going to be a very exciting period, and it's a very tight race according to the odds. It's tightening up. It was supposedly so much in favor of the other fellow, and I think that's changing even in the popular numbers. But the people I know that are Trumpsters don't like to talk to people on the phone about it. They call up and say, "Oh, who are you for?" They hang up. They say, "You're busy on the radio and the TV telling us how idiotic and crazy we are to like Trump. Why should I talk to you about it?"
Yeah, that's for sure. Well, it's certainly different this year than we've ever seen it before, but Well, I think, I just believe in the American people. It'll all work out no matter what happens, That's my 2 cents worth, but who knows?
Well, my 2 cents worth is we will get the government that we deserve.
Yeah. Isn't that the truth? Hey,
take that as you will.
Let's move on to something shiny and bright, and that is the gold. What's your feeling here? We've had a $200 correction here almost. Well, we had $200 correction now from the high. Any feeling of whether we're finished in this bull market, or do we still have more to go?
It might last a few more days because on the 28th, 29th, I think we have Venus trine to Mars, and that is a very soft and sweet and nice time, and that's usually not good for gold, but that might be the temporary low. Mm-hmm. I suspect it will, and I would be a heavy buyer there because I like the gold long term, and I think all of the uncertainty that's going on in the world is going to continue to be very positive for gold over the intermediate and long term.
Mm-hmm. That certainly is a lot of uncertainty. There's no question about that. Arch, we have a question from one of our listeners over across the pond over in Europe. Do you see anything happening with interest rates that would make zero interest rates a foregone conclusion?
Looking at the trend, look at the trend. Interest rates have been dropping around the world, and we are still holding on to, I think, the 10 years 0.67 right now, which is steady lately, the last month and a half or so, but it can move suddenly, and there's like gaps in the chart, which means that it did move suddenly and unexpectedly. So anything can happen with that. I'm expecting if the trend continues, we will go negative along with everybody else.
Mm-hmm. Okay, we have another question. Many months ago, you answered this before, but since we have some new listeners in, how in the world did you ever get started in astrology in the stock market, Arch?
I read about it on the front page of the Wall Street Journal the day before my birthday in 1963.
There was actually on April the 17th, there was an article about astrology in the stock market?
16th. People using astrology in the stock market. There were 4 or 5 of them, and I went and met them all. If they had written a book, I bought it. If they liked the book, I bought it.
Hey, stay with us. I want to hear more of that story. 877-927-6648. Stay tuned for more of Arch Crawford, folks.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, with Arch Crawford, and he's talking to us about how the old master himself got started into astrology way back in 1963. You want to continue, Arch?
Okay, it was an article on the front page, middle section of the Wall Street Journal. You know, they used to have oddball things, and they still have a little column at the bottom left on the front page about weird and unusual and interesting things. So that day, it mentioned 4 or 5 people who were using astrology to predict different stock and commodity markets. And one was, of course, David Williams. Of course, he's the best known and the original book about it, the most original or the most recent powerful one in the 1980, I think it was, 80s. And then there were several others that I went and met them all. And if they had written a book, I bought it. If they liked the book, I bought it. And I went through all this material, and I said, this is not what I want to know. I want to know what is the average percent change in the Dow going back to 1880, whatever, 85 or so, on each of these planetary events. And so I bought a little hand computer and had it mounted on a printer, and I started calculating these cycles. If I was looking at specific aspects in the sky, and then I started computing the entire cycles. In other words, maybe 12 or 24 points on a 360-degree movement of a planet. And it's worked out pretty well. I've piled up a significant record over many, many years, and I'm currently ranked number 3 in the bond and number 3 in the gold market over the last 12 months.
Well, that's pretty good. Those others, 1s and 2s, must be fake news then, right?
I'm sorry, what?
That's a little joke, Arch.
Okay.
Hey, listen, the question someone's asking me, did you ever look, early in your career, did you look at the Bradley model at all?
Sure. I got the book on the little handbook on Bradley from 1948, I think it was.
Yep.
And I started keeping up with that, and that's a voluminous thing to keep up with if you're going to look at it day to day.
Indeed, it is. There's no question about it.
Mm-hmm.
Okay. Now we have one other question, Arch, and then we'll let you go because I know this is the busy part of your thing. When you do your trading, do you use options at all in the gold market, and do you use ETFs or the futures?
I can do either one. I haven't done that much in the gold market. I used to do the actual futures. The stock market, I use options on everything, on many things for a short-term quickie.
Okay.
Yeah.
Okay. Hey, one other quick question, then I'll let you go, Arch, and that is, what's your feeling here on the price of some of these things like Tesla and Zoom and some of these other things that have gone into the stratosphere? Do you have a feeling on these particular instruments or not?
Well, I noticed that they come down as fast as they went up, which is faster than everything else is coming down. Yeah. So I would be very wary of them at this point.
Okay.
The oil looks down, and the dollar index has just risen to a point where there's heavy resistance. At the low that actually occurred, the previous low occurred in March at about 94.50 or 60, $94.60 or so, and we just ticked back up after forming a base, and it's right at that heavy resistance. So if the dollar keeps going up, the gold will keep going down. But if the dollar stops here and starts going back down again, then that would be an assistance to the furtherance of the gold. The gold does have room under it to pull back if it wants to, but I hope it doesn't go very far.
Okay, that's fair enough. Listen, I know you have to go, but thank you very much for joining us, and we'll have you on sometime in October because we always have a lot of fun in October, don't we?
Yes, we do. A pleasure, sir. Thank you.
Hey, thank you. Arch Crawford, folks. If you want to reach him, just go to Arch Crawford Perspectives, and he'll be happy to send you a fruit basket or one of his newsletters or something. But he's been a good friend here for 40 years. All right, we're going to take a quick little look here at one other thing that is really interesting here this morning. I want to get it to your attention here, and that is the price of J.P. Morgan. I put the chart of the banking index up here. This is, of course, one of the big ones in that index. And you can see the nice patterns that we focused on before. You can see the Gartley pattern on the buy side. Back there on March the 23rd, we went up and we make the perfect 61% retracement there in early June. We come down, we make the 135 pattern, and look what's happening now. You see the gap down that we had here last week, and we've been down, as you can see here this morning, we're down 4 days in a row. We're breaking almost below all support, and this is the money, folks. This is the banking index. So this is going to be Goldman Sachs, Morgan Stanley, Bank of America. That's what you're looking at here. So that's pretty much what you want to watch because that's when money moves. This market doesn't go up or down much without those bankers because they do control the funds. So we'll be able to see how that works on, and we'll be able to see how it actually works here. Okay, now we've got 2 more minutes to go. We had one other question, and that is about this silver trade that I did. I want to bring this to your attention one more time, and someone's asking me go through it. Folks, you know how many times I've been talking about 2296. I've been talking about it for weeks and weeks, ever since August the 6th. I said, watch for a 382 retracement. Folks, this thing broke it. And this is not a good sign. If silver's really good, we took out those lows of August, and we should have held at 2296. It looked like we were going to because we rallied almost 20 cents after we hit it. And then in a heartbeat, I'm talking to you within 4 or 5 minutes, this thing was actually, by the time I typed this out, it was already trading at 2304. That's when I sent it out. And then of course, just a few minutes after that, we started to break down, and then it held and rallied. So your stop was filled easy enough. But then in the middle of the night, last night, folks, believe it or not, we had a $15,000 swing in silver. We were up. We went from 2280 down to 2170, back to 2280, and then back to 2205. I mean, that's a $15,000 swing in silver. Now you wonder why they're raising margins at Interactive Brokers and other places. I mean, these are incredible swings. 15,000. That's that's what the margin is on silver now. So that's why they're doing it, is to protect you and to protect them. So it keeps the little guy out of the market, which is good. So if you're going to do silver, do the mini micros, because it's a little too crazy. My strategy now is I'm going to wait and let the market bottom, and then I'll wait and see what happens after that. So we'll see if that's going to be the case or not. But that's what I'm looking. Let's take a break here. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, BAM! As well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, I'm sorry. I'm sorry for laughing, but while we were on the show with Arch, I got not an email, but a Skype message from someone very famous. I'm not going to say who it was, but asking my opinion on the market. And frankly, I started to laugh to myself. But I someday I might say something about it, but I shouldn't have said anything. I should have just shut up. But basically, here's my 2 cents worth if I can find it. And I thought I had it here, but I guess I didn't. Well, it's basically the same thing that we're looking at right here in the DAX there, but they both look exactly the same. Nothing more than the market rallying up exactly to the 382 retracement, and then looks like we're headed lower. But anyway, it was really funny. I mean, we've been friends for a while, but that was hilarious to me. That'd be like me going to one of the famous heart surgeons and him asking my opinion how to do heart surgery. Anyway, let's pay attention to the euro, folks. We had a really nice pattern. It lined up exactly perfectly. We want to watch for a bounce in the euro here. Somewhere between 70 and 120 pips is what we could be looking for. We've been down 8 days. That's usually a sign that we're going to have a rally. It's exactly at the 1.27. It's fulfilled every single thing you could ask for in a trade, and that's why we are watching it. And that's nearly, let's get this up here so you can see it, and there's where you are. You'll be able to see that very, very easily, and hopefully I'm going to be able to do it. Here's the chart that I was talking about on the E-mini S&P. This is the same thing that we're looking at in the German DAX, and that is, you'll see that it'll come in down here around the we're around the 1.27 level. So that's what I'm watching here to see what's going on. Anyway, that's my 2 cents worth, and I'm sticking with it. Tomorrow we are having a super show again with Bill Meridian on. He's got a beautiful set of slides already ready to go. So we'll have Bill on tomorrow. You have your questions for us. Live every day in an attitude of gratitude, and may God bless.